This is Daybreak Asia. We're counting down to Asia's major market opens. And of course, it is really the day after in terms of monitoring what's going on with the yen, with the huge moves that we saw on Monday, sort of potentially a subtle confirmation of intervention that we saw in the comments from the currency chief this morning. But of course, it also is just one part of a story of a big week that still lies ahead going into that FOMC decision.
Yeah, definitely. And interesting timing from the Ministry of Finance doing it on a public holiday in Japan. We'll get a chance to see how markets react in just a moment. But will it be enduring? You'd think perhaps not, unless the macro picture changes violently with the Fed up later this week as well.
And of course, it's not just Japan. We've seen that impact across Asian currencies. And to that point, of course, we had Samsung numbers. And it also just mentioned in some of that commentary of getting that positive boost as a result of that currency effect, right? Take a look at what we're seeing at the open. Of course, Samsung, the heavyweight, is going to be the name of the game today, not just for the Korean markets, but of course also for some of the regional chip makers as well. The Kospi is up by just over 1% at this point. We're still waiting for Samsung to come online, but those earnings surging after the business across chips turned profitable for the first time since 2022. This is part of that much bigger global theme that we're seeing of the AI development boom, that it's turning that cycle after so much of that downturn, right? We saw that $4.8 billion net income number, 6.62 trillion won. Projections were for 5.63 trillion. So a handy beat, and that's about 4 times Samsung's earnings just a year earlier. So a lot has changed in that time. Samsung just coming online now. It is up by just about 1/10%. We'll continue to kind of watch and wait to see how investors react to that. That stock, even though it's up about 17% over the past year, has really underperformed compared to the likes of SK Hynix, which has doubled in that period. We've seen Nvidia about triple in that period. And in fact, for Samsung, off that April peak, we're actually down about 10%. We're seeing a little bit of downside there when it comes to trading in Samsung. Continuing to watch that, but of course, the other big story, as we've been talking about, is what's been going on with the yen. We had the remarks from Kanda, pretty measured. They'll be giving more information when the data release comes out at the end of May, but a lot of the market seeing this as kind of tacit, a confirmation that something was done. The disclosure of those results will come at the end of May. So, Paul, continuing to watch that, particularly as we've yet to get the FOMC decision.
Yeah, that's going to be the big one coming up, and it'll be very interesting to watch any potential yen moves off the back of that. Let's take a look at how we're trading here in Australia. Meanwhile, not a lot of action in the early going. We're kind of flat, but of course we do have the staggered open here in Australia. One stock that we have been watching that is trading, however, is BHP, the world's biggest miner, and that's recovering some of the ground that it lost yesterday. Right now, better than 0.5%. Of course, we are watching BHP very closely as to whether or not it puts in a renewed bid for Anglo American after its initial $39 billion all-stock offering got rejected at the end of last week. We did see BHP shares selling off a little off the back of that, but as I say, recovering a little today by about 0.5%. Elsewhere, we have got the Aussie dollar losing a little bit of ground. The Aussie versus the yen looks pretty good though, 102.43 if you're Australian and you're thinking of taking a holiday in Japan, good time to go. The oil price backing off a little bit as well, 88.35 there, and got the Aussie 10-year yield also backing off. And let's take a look at how US Treasuries are doing in the early trade. We did hear from the Treasury in the United States saying they're just going to need to borrow more than it thought this quarter, more than analysts were expecting to. About $243 billion being forecast. That announcement saw yields ease a bit, and that is a trend that we're seeing continue into the Japanese session. Heidi, the 10-year right now just above 4.6.
Let's get some more report on Samsung's earnings with Bloomberg Intelligence Asia Pacific technology analyst Masahiro Wakasugi. So it must be a relief, obviously, to get that chip division back to profit. What's really interesting to you in these numbers?
Good morning. Yes, Samsung Electronics just reported their earnings, and it has already announced the preliminary earnings, so it was not a big surprise. But if we look at the division profit, we think that its semiconductor business made a profit, so that was really good. So I think that the overall memory chip market is improving, especially for the DRAM and including the high bandwidth memory chips, which is used for the generative AI applications. So basically, we see that the overall semiconductor business, especially memory chip business, is improving. So that was the interesting point. And the operating profit margin for the semiconductor division achieved around 8% operating margin. And we think that the business condition will improve going forward.
So we've got the earnings call coming up when that begins in a little bit under an hour, I believe. What are investors watching out for in terms of some of the commentary around these numbers?
Yes, we would like to check several key points, and the first one would be the DRAM business environment. And especially the volume growth should be very much closely watched. And SK Hynix should be expecting that some kind of mid-teen volume increase in second quarter. So we would like to check Samsung is forecasting higher than that or maybe similar to that. And also we would like to check the how they think about the overall demand outlook for the high bandwidth memory for later this year and even next year. And its peer SK Hynix is seeing very strong demand, and SK Hynix decided to expand the production capacity. So we would like to check how strong the demand for Samsung Electronics. So if the demand is strong enough, Samsung may follow SK Hynix capacity expansion strategy. So we would like to check that point. And another point would be that the NAND flash business as well. And regarding Samsung, we have to check if the NAND flash business made a profit in the first quarter or not, but still could be a bit worse than the DRAM business. So we would like to check how NAND flash business is improving in the second quarter. And also we would like to see smartphone business or consumer electronics. Samsung has a very wide range of products and also in many countries. So they know very much about the macroeconomic conditions. So we would like to see how Samsung is seeing that the global macroeconomy situation in the second quarter.
All right, Bloomberg Intelligence Asia-Pacific technology analyst Masahiro Wakasugi there. Let's take a look at how Samsung's performing right now, along with some of the other big Asian chip names as well. Samsung's, well, the reaction there, pretty muted really. It was somewhat of a mixed bag, better by 0.25% at the moment. Samsung shares over the hit a peak back in April. They've lost about 10% of its ground since then. But that earnings call will be very, very closely watched for some of the commentary around these numbers, particularly in terms of the AI story. Key rival SK Hynix actually losing a bit of ground at the moment, off by 0.25%. I want to take a look at Tesla suppliers as well, because of course we brought you the story of Elon Musk making that flying visit to China. Well, that paid off. We got news that Tesla's got in-principle approval from government officials to deploy driver assistance in what is now the world's biggest auto market. It will be partnering with the tech giant Baidu there on mapping. Still some questions about how it's going to handle data security and privacy, but the market really liked that story. We saw Tesla shares soaring 15% on Monday, and Baidu's ADRs also closing a lot higher as well. Now, here in Australia, we've got a mover for you as well that we're watching. BHP shares currently gaining by 0.75%. We did see them lose a little bit of ground yesterday, and this is, of course, as I mentioned earlier, off the back of that rejection by Anglo American for a $39 billion all-stock bid. BHP shares sold off a little bit on Monday, but recovering pretty strongly at the moment, Heidi.
Paul, let's take a look at the yen, of course, because, look, this is the picture as we see still quite a bit of sustained weakness, right? Flat at the moment at the 156 level. But of course, as we were talking about earlier, this comes before the FOMC, before these expectations potentially come to fruition of that hawkish pivot from Jay Powell. Elsewhere around, we're seeing Bloomberg Dollar Index holding pretty steady, the Aussie dollar at 65.57. We had that note out from Commonwealth Bank of Australia, CBA, pushing back its rate cut expectations for the RBA from September, now not expecting a cut until November. Let's bring in Gufford Reynolds, who leads our Markets Live coverage, and let's start off with the post-Manic Monday situation for the yen. So it looks like they probably did intervene. You know, the commentary was still kind of ambiguous. But if we assume that they did, they're not getting much bang for their buck.
Yeah, that's one of the things that has you wondering if they did. Although, from the other point of view, if Japan did intervene in the yen, they might have, to some extent, been forced into it because you had thin liquidity. The yen went almost through that 160.20 per dollar level. That was the weakest seen in 1990. So if you go past that, it's then back to the 80s as far as how weak the level is, what the scope of the decline is. So to some extent, it's the kind of territory where a government or a central bank would normally intervene for its currency. It's getting to unacceptably low levels. There's no liquidity. If they don't step in, you could get a really disorderly retreat. So there's that. And that's very much about a tactical setup. I stress that tactical setup because you do have the FOMC and also you have non-farm payrolls coming for the US. So there's a big event risk that whatever they did yesterday, if they did do it, could get overwritten by the impact that those events could have on US yields and therefore on the differentiation between US and Japanese yields and expectations for those. Now, the backdrop is also that even though there's a wide discount between Japanese rates and US rates, based on the fundamentals, the way those have usually operated, most people would reckon that the yen is weaker than it should be now. So this has become very much a momentum trade, less than a fundamentals trade. The fundamentals got us to the sort of 140 to 150 area. The momentum has taken us past 150. So to some extent, yen bears are asking, they're daring the Ministry of Finance to come in and drive them back out of it because the fundamentals don't necessarily match where the yen is at. So that means we're all still on intervention watch. Yen volatility and implied volatility, so the expectations that traders have for swings in the currency is still at very elevated levels, the sort of elevated levels usually seen in the run-up to central bank meetings. We're on watch, and you would think there'll be the potential for strong yen moves as we get these US data points coming in.
Yeah, that yen story to a large extent overshadowed a lot of the other news in the region. And another story we've been watching is what's been going on in Hong Kong. I mean, shares, they're rallying 20% off January lows, but seems to be stalling out a bit, and at the same time, a bounce in Chinese property stocks. So how do we square that circle?
Well, it's the story for Chinese and Hong Kong equities this year has very much been they're phenomenally cheap. Investors had been staying away from them for spurring that cheapness. Of course, they've been very cheap for a reason. So the potential reward is there. So is that risk. And we've seen signs that the government is trying to support the share market. The government is also trying to turn the property sector around, although it wants to do so without rewarding people who took what they might regard as unconscionable risks. So there's that question, will that be enough? And there's also, the Chinese share market has cried wolf, so to speak, or inverse wolf, as it were, you're clear, so many times, and investors have gotten burned. So anybody who's gone in at the bottom and has got a 20% return has got to be thinking, might be time to take some money off the table because I can now, without sparking a rout, if I wait for too much longer, the greed and fear nexus tips more and more towards fear as the greed part gets satisfied. It's still very much a speculator's market rather than a buy and hold one.
Catherine Reynolds, who leads our Markets Live Asia coverage there. Still ahead, speaking of Chinese stocks, the mega banks reporting rare declines in profit margins. They're getting squeezed. We'll be getting some analysis from Jefferies, their outlook as well next. This is Bloomberg.
we're going to get China's official and private factory activity gauges for April coming up in the next hour, with economists expecting the recovery to continue, but at a slower pace. So for more on this, let's bring in our Greater China Senior Executive Editor, John Liu in Beijing. John, we are expecting PMIs to ease off a little in the month of April, but there were a few days off in April, some public holidays. So can we explain this away with a seasonal argument, or is this part of a trend?
I think there is a trend beginning to form. In March, we got the first positive reading for manufacturing PMI in 6 months. It was an expansion, 50.8. We're expecting the market consensus is for 50.3, so a slight pullback. Paul, you talked about that vacation. That was actually the first time that spending on a per-trip basis increased versus 2019. And so there is some building momentum when it comes to optimism. You talked to Garfield about the stock market earlier. We've got inflows. There's a little bit more positive sort of sentiment about real estate. We had Chengdu removing any limitations on purchases, and that really stoking some optimism that other cities would follow and we would see an increase in home buying.
And John, it comes at a time when we're seeing, signs of increased international engagement from Chinese leaders, right? There's been a flurry of high-level meetings with the US and visits, and now we're hearing that Xi is headed to Europe. These trade relationships, are they more important than ever right now?
I think they are extremely important given how weak the Chinese consumer has been. China has a capacity issue. There are factories churning out products, be they toys or shoes or electronics or electric vehicles. There has just not been enough consumption here in China to digest all that production. And so China needs to be able to ship some of those products overseas to continue that economic expansion. And if the relationship that China has with the U.S., the West, is so tense that limits the ability of companies to ship those products overseas, that's going to be detrimental to the economy. And we have seen a much more accommodative attitude taken by the leadership here when it comes to dealing with the West. And I think that's what we'll see when President Xi visits Europe.
Our Greater China Senior Executive Editor John Liu there. And big earnings week, of course, for China as well. Vanke has been one that we've been watching. Financial woes there continue to mount. The embattled developer posting a net loss for the second straight quarter. The $50 million loss coming as it continues to struggle with slumping sales and the cash crunch there. Vanke was, of course, China's second largest developer by sales last year. We've seen its stock and bonds on a slide over concerns over its financial condition. Let's get more insight with Shujin Chen, who's head of China Financial and Property Research at Jefferies. Shujin, great to have you with us. So, no real signs of improvement for Vanke or really across the broader property sector, despite a number of measures of support from the government. Where does this story go from here, given we know how much of the broader economy relies on property and property-adjacent industries?
Good question. So first, we actually think that China will continue its moderate supportive policies for the property sector. In the past 1 week, we actually see that quite a lot of cities, including some tier 2 cities, started to significantly loosen the purchase restriction. But on the other hand is that while quite a lot of investors are still expecting on some bazooka stimulus, which we actually think there's low chance to happen. So overall, if there's no bazooka stimulus and China continues to support more like comfortable, affordable housing rather than like commercial housing, we actually see that the property sales will continue to decline. Although the decline could be more moderate in the second half this year comparing to the first half due to the relatively low base.
We've seen a plunge in Vanke's cash coverage of short-term debt to 98% from 151% at the end of 2023. Does this give an indication that for Vanke and perhaps for a number of these other developers that we'll need to see more urgency and frequency in asset disposals?
We do think that, yes, for quite a lot of developers, including some regional SOE developers, there's more urgent for them to sell, to dispose more assets in order to boost the solvency. So for Vanke, we noticed that in the first quarter, their monthly sales is actually around like 19 billion per month. It's actually short of our estimated break-even level, cash flow break-even level of around like 25 billion per month. So yeah, they definitely need to sell more. But however, it's still quite difficult, quite challenging in this environment to dispose assets, considering such a weak property market.
Do you think that Vanke can avoid a default or the need for a bailout? And if it did need a bailout, how well placed is the local Shenzhen government to provide that support?
So if the situation hasn't changed, let's say if it's very hard to see a turnaround of the sales and also the disposal of asset will remain slowly, then Vanke may probably need some support from either the local government or the central government. For local government, because for Vanke is actually 27% held by Shenzhen Metro, which is a wholly subsidiary of Shenzhen government, we actually already saw some supportive policies from the Shenzhen government. However, if we look at Shenzhen Metro, its own profitability is actually doesn't have a very strong profitable business model, and its own balance sheet remains quite weak. Besides, Shenzhen has another regional SOE developer defaulted on public debt in February. So we actually think that the chance for bailout from Shenzhen government to Vanke is relatively small.
Xu, of course, China's banks are very exposed to what's been going on in the property market as well, and we saw from the results yesterday profit slipping. How well equipped are China's banks to withstand this long winter in Chinese property?
So first is that regarding to the China bank's property decline, it was mainly due to the net interest margin contraction rather than the asset quality pressure. In the first quarter, the bank still reported NPL ratio quite stable. Some even see the improvement quarter on quarter in NPL ratios, especially those large SOE banks. So the net interest margin pressure is the key issue, is the key pressure for the reported profit. For banks, we still see the net interest margin contraction in the rest of the year until first quarter next year, mainly affected by the LPR cuts, especially in the first quarter this year. We will still see some loan pricing as well as new loan yield will continue to decline due to the very weak credit demand this year.
So when do you see the actual bottoming out for margin erosion? Because it's hard to see a situation right now that the government stops pressing on these banks, right?
Very good question. So yes, on one hand is that we still see banks' loan growth are much higher than the nominal GDP growth. Especially for SOE banks, we see that you can see that the first quarter loan growth is still around 12% or at least more than 10% year on year, while the nominal GDP growth in the first quarter is actually lower than 5%. So this situation may continue in the rest of the year. Therefore, the overall net interest margin, as we just mentioned, will still decline. So the earliest time that we expect the net interest margin bottoming is first quarter next year, due to both the weak credit demand and as well as the LPR cuts.
All right. Xu Chen, Head of China Financial and Property Research at Jefferies. Thanks so much for joining us. We have plenty more to come on Daybreak Asia. This is Bloomberg.
Take a look at currencies. Of course, front and center is really still dollar yen. We saw in the overnight session that momentum move in the yen actually driving the dollar to a 2-week low. But we are seeing that a loss of momentum now. Really, if there was intervention, it doesn't seem like it has had much of a long-lasting impact. More to come here in Daybreak Asia. This is Bloomberg.
All right, let's take a look at how crypto assets are tracking at the moment. We've got Bitcoin rising again, just shy of $64,000. Been a good year for digital assets. Bitcoin itself up 50% year to date. Of course, it is notoriously volatile, but the launch of the spot Bitcoin ETFs in the US back in January, that really catalyzed prices to go higher. And now it's going to be Hong Kong's turn. Hong Kong spot Bitcoin and Ether ETFs going to debut today, and this marks a crucial step for the city as it aims to build a hub for digital assets. Bloomberg's Annabelle Drawers is with our next guest at the Hong Kong Stock Exchange. Belle.
Thanks, Paul. Yeah, as you said there, really big morning for the city today, given we've got these 3 ETF issuers that are bringing not only spot Bitcoin ETFs to market, but the Ether spot Ether ETFs as well. But let's discuss now and bring in our first guest. This is Ryan Roberts, Head of Equities Product Development at HKEX. And Ryan, I think really what people want to know is just the level of interest we're going to see. Of course, there's been a lot of funds that have gone into the US ETFs. Yeah. Will we see a similar sort of flow for Hong Kong, do you think?
Well, thanks, Annabelle, for having me today. It's a pleasure as we kind of usher in the next frontier for Hong Kong ETFs. And we're excited to welcome the first Asia's first virtual asset spot ETFs with the listing of 3 Bitcoin spot ETFs and 3 Ether spot ETFs as well. I think this is really going to go a long way to enrich our product diversity and also just further strengthen Hong Kong's position as ETFs marketplace. I think for investors as well, this is actually going to bring out a product that's listed on a familiar exchange for them that really brings a scalable link from traditional finance to virtual assets. And I think with these products, it's really going to help to kind of reduce some of the complexities and burdens of owning virtual assets outright. And they'll be able to now access these products in probably a little less than an hour from now on Hong Kong Exchange. And they'll be able to do so in a very familiar wrapper that's liquid, transparent, and also trades during Asian trading hours. And I think that's very, very important now. With all of those positive aspects to it then, but what are you actually expecting in terms of demand for these? What sort of AUM, for instance, to the year end? Yeah. So, I mean, we don't put any kind of expectations around there. I think for us, this is day one of the journey. This has been kind of the last couple of years. We've been really working towards bringing this out into the market. A year ago, we brought out the futures-based spot ETFs. Today we're going to mark the listing of Asia's first spot virtual asset ETFs. And you can kind of see from the background here, there's a lot of interest for these kind of products in the market. The futures ETFs, though, haven't seen great subscriptions so far. So would you expect the demand to be better than what we've seen for the likes of CSOPs, for instance, or Samsung Asset Management's futures and futures ETFs? Yeah, I think the futures-based ETFs, I think they've actually started to gain some momentum this year. We've seen really good increase in trading volume this year. They're trading about 50 million Hong Kong dollars a day, so we've seen an increase there. And they've also raised over 500 million Hong Kong dollars in assets. So I think as the market has kind of turned around for Bitcoin and Ether and seeing better performance, we're seeing more investors coming into that space. And I think now with the spot ETFs, I think this will just be another addition, just kind of enrich the product diversity. And I do think there is demand for investors to get this spot assets, the Bitcoin and the Ethereum assets here. So I think this will be really good. When it comes to diversity, then when could we expect perhaps different structured products to come to the market? Because I think also what investors want to see in Hong Kong is anything that's sort of linked to derivatives, for instance. Yeah, I think anytime we, at HKX, we're always trying to create really a vibrant, product network effect. So we'll start with the ETFs and start to build that out. There could be levered and inverse that comes down the road, structured products, derivatives. Again, we want to start with the cash products, build up the initial demand from there, and then from there we can start to kind of expand that product ecosystem. But you think levered and inverse is what's next for you? Well, I think we'll continue to kind of iterate here. I think we can continue to go into the physical spot assets, maybe composite types of products, eventually getting into maybe levered and inverse types of strategies. There are needs for investors to be able to get access to inverse types of strategies for hedging needs and different things along those lines. So there's possibilities of that down the road, but we need to see how this one kind of develops and matures before we kind of go to that space.
What could really, of course, stimulate a lot of demand would be whether these ETFs are included into the ETF Connect program to give mainland Chinese investors access. When would that happen?
Yeah. So I think that's a great question, and just a couple of weeks ago, the SFC and CSRC had a joint announcement that actually is going to reduce the product eligibility, so lower some of the eligibility thresholds, so lowering the AUM requirement, lowering the securities weighting. And so now when this goes into effect, and hopefully that'll come into effect here in the next several months, what it'll do is it'll allow ETFs for the southbound ETFs in Hong Kong to hold up to about 40% international securities in there. So I think this is going to be a great source of product innovation, seeing more issuers come into this market, more products being eligible both for mainland investors via Hong Kong and for international investors going into the mainland. And virtual assets, I mean, we can look at that kind of down the road, but I think we're just excited about the new kind of enhancement that we're going to have that was just announced a couple of weeks ago.
So if there's 4 ETFs right now that are on the ETF Connect program out of, say, 180 or so in the city, how many more then do you think will be eligible with the new criteria?
I mean, right now, we'll go through the review process here in a couple of months, and we'll see kind of where everything kind of falls. But I do think we'll start to see more ETFs included both in the north and the south. To be included in ETF Connect. And again, I think it'll, for us, it's less about what will be included kind of day one in this initial kind of phase. But again, I think it's going to allow ETF issuers, new and potential and existing ETF issuers, to bring out new kind of strategies that will help to meet demand in the mainland.
And last year, of course, and this is a bit of a bigger picture question, but we did have the Saudi ETF listed in the city.
Yep.
What are you doing in the other direction?
Yeah, so, as you mentioned, late last year, we listed the CSOP Saudi Arabia ETF. That ETF has done really well and now has over 8.5 billion Hong Kong dollars worth of AUM. It's the largest Saudi Arabia ETF in the world. And this is all part of really the, Hong Kong and China having better connections with the Middle East and vice versa. So that was the first stage of it all. We would love to see some of our products and China equity and Hong Kong equities go to the Saudi Arabia ETF market. And I think we'll work with our counterparts over there, the ETF issuers in Saudi Arabia, to eventually make that happen. But again, Saudi Arabia ETF here was the first step. Next step will be to bring products there in due course.
All right, Brian, thanks very much for your time. That was Brian Roberts there from HKEX, Paul. And you can probably hear the enthusiasm in the air this morning. Of course, we're just approaching that listing ceremony that will start in the spot Ether, spot Bitcoin ETFs coming live in, about 50 minutes from now.
All right, Bloomberg's Annabelle Jewell is there at a very vibrant, lively Hong Kong stock exchange, and we're going to have more on Hong Kong's crypto ETF debut later on today. You can catch our interviews with the CEOs of China AMC, Harvest Global Investments, and Hashkey Capital at these times that you see on your screen. Binance CEO Changpeng Zhao will be sentenced on Tuesday after a guilty plea on U.S. money laundering violations. Prosecutors want a 3-year prison sentence for the crypto billionaire, also known as CZ. Cross-Asset Asia editor Richard Henderson joins us now for today's Big Take. So, Richard, is it likely that CZ is going to be sentenced to those 3 years?
Yes, that's a good question. That's obviously what we're all waiting for. It's important to note it was only a week ago that the US prosecutors had requested those 3 years. The sentencing guidelines that everyone had been talking about indicated about 18 months. So this is obviously double that length of time. So some of the reasons for why the US prosecutors have asked for a longer sentence for those 3 years is CZ's flippant attitude. We know that in the past he's told his own employees, and this is according to US authorities, to break the rules, to wantonly, flagrantly avoid the regulations that the company should have been following. And so it's that attitude that permeated through the company, the US alleges. That's one of the reasons that they're looking for a harsher sentence of 3 years.
Richard, has there been much impact and going forward too on Binance itself?
That's a great question. There has been very limited impact from what we can gather talking to users of the platform. And let's remember that Binance is the largest crypto exchange globally. Its market share was up to around 60% of spot crypto. That's around 40% now. It did dip and it's recovered to around 40%. That makes it still the world's biggest. So that's really important. Users are still using Binance. In terms of its operations, the board is basically packed with a lot of those who were close to CZ during his time as CEO. His partner or former partner, who is the mother of his 3 children, is closely involved in the company's operations. Overall, it appears that things are going quite well. We saw a 30% increase in users in calendar year 2023, and also in the year to the end of March. Estimated revenues from Bloomberg estimates are almost $10 billion. So it's a hugely profitable business, doing very well. And of course, we've got the backdrop of this boom in crypto assets, with Bitcoin touching a high back in March.
So if CZ does go to prison, what are the chances that he can still sleep well, knowing that he's still a billionaire?
Yes, well, as part of his plea agreement, he is allowed to keep his shares in Binance. He has around a 90% stake. The value of that is around $43 billion. He ranks on Bloomberg's own rich list on number 38. So this is one of the wealthiest individuals in the world, and by far the wealthiest prison inmates when he eventually does go to prison, whether it's for 18 months or 3 years or some time in between. So he will still be wildly wealthy and will be leaving prison after his sentence a billionaire, one expects, given the fortunes of Binance so far, and this resurgence we're seeing across the crypto world, helped along this year by spot Bitcoin ETFs launched in the US and now today in Hong Kong as well.
Cross Asset Asia editor Richard Henderson there, and subscribers can read the full story for today's Big Tech on the terminal. You can head over to Bloomberg.com as well. More to come here on Daybreak Asia. This is Bloomberg. Well, data security is again taking centre stage in the intensifying rivalry between the US and China. That's after Washington last week moved to force a sale or ban of TikTok. Beijing, on the other hand, seems to be embracing firms that play by its rules, including Tesla. For more, let's bring our Asia government and economy correspondent Rebecca Chung-Wilkins. So it is interesting, isn't it? Because on the one hand, you have the ongoing engagement, high-level engagement. Yellen, Blinken, we'll talk a little bit about as he headed to Europe soon. But at the same time, you know, these evergreen areas of tension continue to play out.
Yes, I think the Tesla TikTok story is an excellent encapsulation of that. It really is a sort of tale of two tech companies here. When we see TikTok on the one hand facing this divest or ban bill, and it did take quite some time, it's worth remembering, to finally get to a framework where US lawmakers felt comfortable actually moving on that legislation. This is effectively years in the works. Versus firms like Tesla with that Baidu partnership now announced. And what essentially we're seeing is that as we see increasing obstacles and challenges, a bit more trade friction when it comes to physical trades and access to strategic technologies, but that data too is equally moving along these lines of the fragmented world and becoming sort of increasingly disparate and separate, with the US, of course, taking on some of those qualities of restricting internet access, which China has long been criticized for.
Well, as Heidi mentioned, we've got China's President Xi Jinping on his way to Europe. He hasn't been there for 5 years. What achievements is he seeking on this trip?
Yes, this is a really interesting one. So that kicks off May the 5th, and we are going to see him going to France, Hungary and Serbia. And even that sort of selection of countries is quite interesting here. So his first trip to the European Union in 5 years. Now, France, there's some really interesting sort of colour details coming out from what we're going to expect from that trip. But, you know, for President Xi Jinping, Emmanuel Macron poses a figure that perhaps is more receptive to his messaging. We know that Macron is planning to invite President Xi Jinping to his grandmother's house in the Pyrenees. And it's sort of this very reciprocal, personal gesture that in some ways matches the invitation that Xi Jinping extended to Macron when he was last in Beijing, inviting him to the Guangdong governor's residence, which is where Xi Jinping's father was posted. So we are seeing this sort of personal touch coming in here, but it's going to be a challenge, of course. These big presiding issues over EVs is still reigning. France, of course, was one of the main backers of that EU probe into EVs. And China, for its part, has also targeted an anti-dumping probe that essentially looks at French liquor and so cognac. And so we are expecting Macron, in fact, to raise that issue of cognac at this dinner at the Elysee that he is planning for Xi Jinping. So as much as we are seeing sort of both these warm gestures on both sides, quite a few points of friction.
Our Asia government and economy correspondent Rebecca John Wilkins there, who'll be all across, of course, that European foray by Xi Jinping. Take a look at how markets around the region are trading. And broadly, we are seeing a bit of upside tracking the Wall Street session higher there. We are seeing leadership from Japan, of course, after that delayed opening with the public holiday yesterday, giving traders really in Japan the first chance to react to that volatile yen session on Monday. That sparked suspicion of intervention, which may or may not be kind of getting closer to being confirmed, and we are seeing quite a bit of upside there, both for the Nikkei and the broader topics as well. A big outperformer when it comes to the topics is really Toyota, seeing a gain of almost 2% there as we continue to watch the play out when it comes to the yen. We're also seeing quite a bit of upside for Korean equities. It is a Samsung story, of course, that chip division finally returning to profit. A pretty healthy reaction all round, but of course Samsung seeing a pretty muted response there, given that stock has really underperformed the other chip leaders like Nvidia and SK Hynix. Korean companies, though, when it comes to first quarter earnings, some progress being made when it comes to corporate reform. We are seeing Korean equities getting some love from funds that have shunned other emerging market Asia peers there. The other spotlight that we've cast on is over trading houses in Japan as we get this Japan reopen. We're seeing broad upside, really robust upside, including for Sumitomo, who's leading all of this, with Elliott Management having built a quite large stake in Sumitomo. This is, of course, Warren Buffett's one of Warren Buffett's favourite Japanese trading houses. That was according to Bloomberg reporting. We had seen, of course, Elliott previously pushing for governance changes at Toshiba, at SoftBank as well, and Sumitomo reaching a record high last week and just extending those gains today, up by over 7%. Well, you can also tune into Bloomberg Radio to hear more from the day's big newsmakers, get in-depth analysis on our top stories from the Daybreak team there. We're broadcasting live from our studio in Hong Kong. You can listen in via the app, Radio Plus, or BloombergRadio.com. This is Bloomberg. The top corporate stories that we're following this hour. Paramount Global has replaced its CEO, Bob Bakish, with the management committee headed by 3 senior executives. The media giant is negotiating a possible merger with independent producer Skydance, led by David Ellison. Separately, Paramount reported first quarter earnings that beat estimates on the back of Super Bowl ad sales and improving results from its streaming service. WeWork and its major financial backers, including SoftBank, have struck a new restructuring deal, spurning a competing plan from co-founder Adam Neumann. The senior lenders have agreed to provide $450 million in financing in exchange for equity in the reorganised business. The deal could see WeWork exit bankruptcy protection in the coming months.
Well, we heard from Samsung a little bit earlier this morning, and South Korea's robust first quarter earnings and its government's corporate reform initiatives are fueling foreign investors' faith in its stock market. For more, Asia stocks reporter Ashika Mukherjee joins us now. Ashika, how has Korea's earnings season been so far compared to its peers?
Hi, Paul. Just for some context, foreign funds have put about $1.7 billion into South Korea's stock market in April. That's in this whole higher for longer interest rates narrative, a stronger dollar. So it's looking pretty good for the stock market. Most other markets have seen net outflows in emerging Asia, excluding China. The earnings season is a big driver for this optimism. Nearly 70% of the companies that have reported earnings so far have posted better than expected results, according to Goldman Sachs analysis. Of course, this morning we saw Samsung adding to that with its big profit beat and returning to profitability for the first time since 2022. And you also have industrials and consumer staples firms that have beaten estimates quite nicely. Some examples are Samsung C&T, there's also HD Korea Shipbuilding. And ahead of the second quarter, Goldman has seen that IT firms and consumer staples firms are seeing positive earnings revisions from analysts. So it's quite a good trend going on in the market right now.
Ashika, we've seen the corporate value up trade losing momentum of late, and we know this is a longer term story, but are traders still positive on the resolution of the so-called Korea discount?
Absolutely, Heidi. So the corporate value up trade is expected to see some momentum from May 2nd. Hopefully, that's what investors are hoping for. And that's one of the other reasons why foreign funds are still getting into the market. The Korea Exchange is expected to come out with more concrete measures on this corporate value up program that's intended to boost valuations of companies and improve shareholder returns in the country. They quite disappointed the market back in February. So I think everyone's going to be keenly watching on Thursday when the Korean Exchange comes out with more details. We're also expecting a value up index to be launched in the country that will track the firms that will benefit the most from any such initiative if implementation is carried out properly. The bellwethers to watch, though, will be the family-controlled firms such as Samsung, because really these are the ones where change in terms of corporate reforms has to happen the most. And lastly, policymakers are tabling or looking to table dividends being taxed separately.
Okay, Asia stocks reporter Ashika Mukherjee there. Let's just take a quick look at how Samsung is doing. Of course, we had a beat on some of those headline numbers. The mobile unit ended up being the single largest contributor to first quarter earnings. Samsung shares now picking up a bit, better by 1.7%. We do have the earnings call starting at the top of the hour, so stay tuned for headlines out of that. Right, that's it for Bloomberg Daybreak Asia. Markets coverage continues to the start of trade in Hong Kong, Shanghai and Shenzhen.